Okay, so today we are doing market structure, and this is part 2. Okay, so let me just open my lesson notes so that you get to see. So if you have something to write, please do write. So if you have something to write, please do write.
Okay.
Yeah. So can you see my screen very well? Is it bold? Is it bold?
Yes, I'm seeing it. I just zoomed it.
Okay. So now this is how the market moves. It moves in a zigzag format. So when the market is going down, it's downtrend, and when it is going up, it is uptrend. So you can see that in a downtrend we are having series of lower high, lower low, lower high, lower low, like that. Okay. While in an uptrend you are having a higher high, higher low, higher high, higher low, higher high, higher low, like that. Okay. So now the secret with this thing is you being able to identify when there is a break in market structure. So by that I mean to identify when the market is changing from you need to identify when the market is changing from the bearish mode to the bullish mode. So now I'm going to open a chart. Let me use any chart at all. Let's use XRP. Let's use XRP for example. And I'm going to open 4-hour chart so that we'll have enough sample. So you can see this 4-hour chart now. Is it big enough for you? Can you see it clearly?
Yes, I can see it.
Okay. So this is a 4-hour chart. Now let's identify the market structure based on the 4-hour. So this is the highest high here. Okay, so we'll just label it. Okay, this is our higher high at the top here. Okay. Now, when this market reached this higher high, the sellers entered the market and they pushed the market down. Okay, so now when they push the market down, we don't know whether this low, we don't know what this low will be. You cannot know whether this low, are we still in uptrend or downtrend? I don't know. So the only time I will know that this low is not confirmed. So if you go and buy this, you are in a risk. For you to confirm that this low is a higher low, for you to confirm that we are still in an uptrend, this low the buyers here should be strong enough to overcome the sellers. Yes, they must be strong. If they don't break it, there is no trade. Don't waste your time trading. Okay, so you can call this the sell wall or sell gate or the resistance, anything. My own is just understand there are different names. It doesn't matter what you call it. So this is the range. This is the range we are looking at. I know that this market, you see this strong bullish move here. So it shows we are in a bullish trend, but we don't know whether the market because this market is coming down, so we don't know whether we are still buying or we are selling. So we'll wait for the market to tell us. Okay, so I'm assuming that we're still in a bullish trend, but let's see. So when this low formed, you cannot trade it until the buyers overcome the sell gate or the last resistance. If the buyers don't overcome this resistance, if the market doesn't trade above it, you don't have any business buying. It means that the sellers are in control. So all these things you are seeing here now, you are not supposed to buy it. Just forget about it. Yes, you're not supposed to buy it. So you can see now that after this whole low now, the the market now, the sellers also, there was another sell gate here. So this our sell gate now has come down. We bring this sell gate here down, and then we also bring the buy gates down. Are you seeing it now?
Yes.
Good. So now, when this market comes here, this low is not still confirmed. So the market, the buyers push the market up to here, We are not buying anything. We are not sure of what's going on. Okay, but when when something happened here, that the buyers were now able to what, push above the sellers at this point. Yes. So now because they have pushed above the resistance line, so you draw this place now. So there is a new sell gate around here. You see that? You draw it. So now when the market has broken this structure here, it's possible that, so you draw this sell gate here, just draw it. This is where the last sell came. So now when the market has broken this structure, it means that this low is now a higher low. Do you understand? So that's when this buy wall is confirmed. And you can see that the market did not reach it again. It didn't reach it again. Can you see? So now that means that this one was the lowest, the low. This low has been confirmed because the buyers was able to break above the sellers here. Okay. So now when this low comes here and drop, when this market drop for the first time, you can buy. But even if you are afraid of buying, you can just wait for a retest, and that retest must give you a higher low. So can you see that if you draw this low now, the market, remember that the market is confirming this buy wall here. So assuming that this market fall and break this buy wall, the market has entered the bearish mode again. Do you understand? So it's not supposed to. If this low broke this one, the market is not supposed to break this one again. If it breaks it, then you close your trade. That's a loss. So you see that normally the market can test a confirmed low. It can test it like 2 or 3 times, or even 4 times before it will break. So that's why you see that after the buyers overcame this sell wall here, the market came here to retest the low for the second time, confirm it, and then came here again, the last one. So this was the last retest. It came here and retested the low for the last time. So that means that's why you see all those things that you call triple bottom. It's not about knowing the name. It's about understanding the market structure. Do you understand? So you can see that since this was the final low, this low has been confirmed because the buyers overcame the sellers at this point. So if I'm buying this dip, maybe I can buy here, or I can buy anywhere here. I'm not afraid because I'm looking at this particular low here. The main low that is holding the market is this one. Okay, the market should not break this low. Okay, so once it breaks that low, the trade is invalidated. Okay, so and then when you buy this trade, where is your first take profit? At the sell wall. At this red line here is the first take profit. Do you understand?
Okay. Yeah.
So that is your first take profit. Always take.
So,
yeah, go ahead.
I have a question.
Yes.
Where do we start to analyze the market?
I'm coming.
Like,
I'm coming. Don't worry about this. Just understand the market structure first. I'm coming because there is a way you start to analyze from the monthly and weekly and daily. That's where you start to analyze. But I'm just giving you this. What I'm teaching you now applies in all time frames. Okay, so
that's what I'm trying to say. I'm not talking about where to start, like starting from monthly or weekly?
Would
Like,
it?
like as you are in 4 hours time frame now,
Yes.
where do you start from? From like,
Where
looking at this chart now,
you
candlestick now.
yes.
Where do you start from to look at the market?
Okay, so if I want
Yes.
to analyze, where you start from is to just label, look at where the market is at the moment, identify the higher high and the higher lows in view. So let's say like this market is somewhere here now, like this SRP is here now, this SRP is trending up now. So where will I start? I'll go to the weekly.
From the date.
Yeah.
This is from today's date now. You start.
No.
to analyze the market.
No. You look at the structure.
From which date?
There is no date. You look at the structure of the market. Look at the overall structure. So now this is weekly. I mean weekly now. So at least I know that this market is in an uptrend. Can you see that the green candles are always so? Now what will be my structure? Where is my sell wall and my buy wall? My sell wall is I know the market dropped there. So I'll identify the range. So I know that the market there was a buy wall around this place. The market broke here. Okay, so now I know that the buyers are in control because the last buy wall was somewhere where the market broke out was somewhere around here. So that means this yeah, go ahead.
If you let's just say if you just click on the 4 hours time frame, will it just appear like this?
No. You just need to you need to know where the market is trending on the weekly. Is it trending up or is it trending down? Then based on the weekly and the monthly direction.
Okay, so you have to scroll back, like you have to move the chart.
Yes, to higher time frame.
Understand how it's going.
No, you need to go to the monthly and the weekly. So this is monthly now. See, this is a push. So I know that the buyers are in control on the monthly. So anything I'm looking for is to buy. So you can see this strong push here. Strong push here. So I know that we are making higher highs. So on the monthly, the buyers are in control. So now I've known the direction of the monthly. I'll go to the weekly to see what is happening. So now on the weekly, I will say where is my higher high and higher low. So I need to see, are we making a higher high and are we making a higher low? So this is my weekly chart here. So it's obvious from the weekly. So this was my last higher low. So I know that this is my higher low somewhere here. Higher low. And then you have after higher low, the higher low will produce a higher high. So I know that this is my higher high somewhere here. So if I have a higher low and higher high, it tells me that we are in a bullish market, is it not? So we have a higher high. Then after higher high, what's the next thing? This higher high produced this it produced a lower low here, somewhere here. So I know that I have a higher low. So I have a higher low here, and this higher low produced a higher high. So I know that the market is still in a bullish. We are still now, but the problem now is this. See a problem. So now we are a higher high, right? Good, right? But then look at this whole week here. This week it should not break this low. Remember that this was the last the last sell wall. This was the last higher low. Okay, so this week that crossed here, it should not happen. Remember that in a bullish market, we are having higher high, higher low, higher high. We're supposed to have a higher low if we're still strongly bullish on a weekly. We're supposed to have a higher low, but you can see that this thing now is we had a lower low. Instead,
yeah. Why analyzing that? Like you just marked your your lowest higher low.
Yes.
Well, let's assume now the week crosses over. Does it matter?
It matters, yes.
The week, just the week, not the body. Okay,
Well, it's sometimes, yeah, it depends, because if we are still bullish, if we are still bullish, the only thing that will confirm it, because now I'm a little bit afraid, because this week is, remember, this week is crossing on the weekly, on a higher time frame. It's not on a small, it's not on a lower time frame. So normally they say that if the body closes below this place, closes below the higher low, then we are bearish. Do you understand? But for me, this is a sign of weakness. A little bit sign of weakness, because it should not go below on a normal day, because this is a weekly time. So for me, I will be a little bit cautious. Okay, I'll wait for the market to come. Remember, I told you that the market tests like a level like 2, 3, 4 times. So if we are really going to continue going up, I want the market to come down again. Remember, this low is not confirming. Yes, so it will either make a higher low and then I go buy, or it will break down and bearish market. Do you understand? So now understanding where we are on the weekly, we see that we have made a lower low. So that means maybe somehow it's going to retest this higher high again on the weekly. Are you getting how we are getting our direction?
yes.
So I understand that there is a weakness here, because there is a break in market structure here, or some people call it a shift in market structure. It doesn't matter. You mentioned that there is an anomaly somewhere here. So, and I know that after an anomaly, the market is going to retest the other side. So it has broken structure here. So now we are now looking at what is the market going to do at the higher high. So it's going up. The market, it doesn't reverse with one test. So we have like 2 or 3 tests of a level. Okay. So now, based on this analysis, now we know that we are even though there is a weakness on the weekly, but we know that the market currently is going up. Do you understand? Because we are going to retest this level. Okay. So based on that, I have my bias that I'm looking for bullish setups in a weak market on the weekly. The market is bearish on the weekly, but I'm looking for a bullish setup. So based on that, I will now go back to my daily. You see, so this is how we do the analysis now. Okay, this is how we do. So now I'll go to my daily to see. Remember, I've marked out my targets, my sell wall. So that's how we arrive at all those things now we are doing. So I've marked out my sell wall and my buy wall, or you call it support and resistance, anything you like, call it. The main thing is to understand what you're doing. So blue is my buy wall. This week is a break in market structure on the weekly. Okay. No, on a normal day, I would have loved for the market to come down here and give me another W, and then I can buy with confidence and hit this place. But because the market didn't test it, that means it wants to test this place first, and maybe after testing this place, it's gonna go down, or it's gonna continue. I don't know. Okay. So that's how we frame our trades to know the direction. We are trading based on the weekly, the monthly, and the weekly direction. We'll just find entry on the lower time frame. Okay.
Okay. So
go ahead.
let's say you analyze with 4 hours and 1 hour now.
Okay. So
you want to pick your entry.
Good. Now let me.
Let's just say.
Yeah. Go ahead.
Let's say you analyze on 4 hours.
So this
and
4
also
hours.
analyze on 1 hour.
Yes.
And then you want to pick your entry on a 15 minutes time frame.
Yes.
Will you still do another analysis, like
yes,
mark out
your
high and low?
Exactly. Inside that 4, remember we have used the weekly and the daily and monthly to know the overall direction. So now we'll now go back to the 15 minutes and we'll now do microstructure analysis. Yes, inside the 15 minutes now we'll mark out the higher high and the higher low. So now let's say now I know that we are looking at bullish entries. So now I'm going to do another higher high and a higher low in the 15 minutes or in the 4 hour. I'll use 4 hours first before I'll go 15 minutes. So now this is my 4 hours. I'll come here looking at where we are trading now. This is my here is my like the lowest low here, or whether it's higher low or higher low, I don't know. So now here is my this one here is my I call it lower high. Okay, yeah, we are bearish. So this is my lower high here. So now after this lower high, what did we have? Did we have another lower low? No. So we had a higher low this time around. So that is a shift in market structure. Okay. So we'll now mark it. This is our higher low. Now this higher low, did it produce a higher high? Let us check. This high here is higher than that's higher low. Yes. So if you mark it, you see it's higher. Can you see that?
Okay, the market is turning from the bearish to the bullish.
Good. So now this is called a shift in market structure. Okay. So once you have a shift in market structure on the 4 hour, then you can now go to your 15 minutes to catch your entry. So this whole downtrend now, we will go to 15 minutes to catch where it's going to reverse. Do you understand?
Okay.
So now we have had a break in market structure or a shift in market structure here on the 4 hours. So you wait for a shift in market structure on the 4 hour, then you can enter on the 15 minutes. Or you wait for a shift in market structure on the daily and you enter in 4 hours. Do you understand?
Okay.
So now that we have that the buyers have overcome the sellers here, so what we will now do is within this, I will now mark a line to catch this downtrend. So this is where the downtrend began in 4 hours. See this purple line. I will now go to 15 minutes. I'll go to 15 minutes to see. 15 minutes. I want to catch where did the downtrend end. So you see now can you see this is our downtrend on 15 minutes. Okay. So let's be drawing it now. So now I'm doing another higher low inside 15 minutes. So our higher high, the last higher high was here. Okay, and then we had another higher low here, right? That's a lower low. Okay, are you getting it? Hello.
I'm not seeing it.
Okay, it's not zoomed. Okay, can you see it now?
I'm seeing it now.
Is it better? So now this is that purple line. This is that purple line. So now we are monitoring the downtrend on 15 minutes so that we'll be able to catch the reversal on 15 minutes. So I'm going to use my text. So this is our, remember we are in a downtrend. So this is our this is our lower high. Then we have lower low. Okay, then you have here lower high because it's lower than this one. And then remember, this is not the lower low. This one, for you to have a lower low, it must break the previous lower low, right?
Yes.
So assuming I mark a line on this is our last lower low. So can you see that this place, this one here, is the lower low, not this one, not this one. The lower low is this particular one here. So I'm going to mark it. So this is our lower low here. Okay, lower low. Then I'll move my this thing again. Now our lower high. Which one is our lower high? The lower high you should not cross this previous one. So this one is higher than this one. So this is our lower high. Here, lower high.
Okay. So when marking the lower low and lower high, you mark it at the weak line.
Yes, at the weak line.
Not the body. Not the body.
At the weak line, weak. I use weeks, yes.
Okay.
So now after this lower high, I'll now look at the last lower low. So this was the level of the last lower low. So I will check which one was the lowest before the market bounced. You see that the market bounced here, but it didn't bounce much, but it came here. This one is lower than this one, so it's bounced very well from here. So this is our new lower low. This one here, this one, not this one. It didn't bounce much from this. It bounced much from here. So these are our new lower low, and then this is higher than this one. So that means that this is our lower high. So this is how we monitor the market, like that, lower high. Now remember, for us to have a lower low, it must be lower than the previous lower low, right? So this one is not this is not a lower low. This one is not. So we'll just take our line and come here and mark it. Okay, then we wait for the market to come to drop below it. So once it drops below it, then this lower high is confirmed. So we'll now check where will it bounce very well from. It didn't bounce well from here, but it bounced well from here. So that means that this becomes our new lower low. Okay, and then we'll now label it lower low. Now we'll now check where is our the last lower high. The last lower high the market reached here. Remember, it's not more than the last one here. So this is our new lower high. We'll mark it. Okay, then I'll label it lower high. So this is what we are doing with our eyes to train your eyes to be able to see it. Now this lower high, we'll mark the last lower low. We'll watch, So this is our lower low here, somewhere here. Our lower low is somewhere here. So we'll mark it. Text.
Lower low, lower high.
I mean here.
Which one?
This
lower
one.
Low, lower high.
Lower low. This one is lower than this one. This one.
Okay. Okay.
So, and then this lower low produce this lower high. Produce this lower high here. You see? So we'll mark this one as our lower high. Lower high. And then we will now check where was the last lower low. The last lower low was somewhere here. Then we will now see that we had a lower low again, which is this one. So the market is still in downtrend. So no trading, you're only observing. Okay, so we have a lower low here. And then this lower low, I'll put my line there. And then I'll mark my lower high here. So this is my lower high. Okay, so we are looking at the lower low. Now we'll be watching very well. So now after that, this is our last lower high. Remember, okay? And then we had the market broke down below it. So we now had a new lower low again. We had a new lower low. So how do you know when to enter? So now this is the lower low. So we will now mark the last lower high. This is the last lower high here. See this one. This was the last lower high. How do you know when to enter? This was the last lower high around this place.
Okay.
So we want the market to break it. We want the market to break it before we can confirm. So now, once the market breaks this structure on the 15 minutes, so you can see that here it tried to break it, it couldn't break it. Okay, but somewhere around here it is broke. It's even closer above itself. Okay, so once it's closer above it, you can buy at this point from here. Okay, so and you can see once you buy, you see what happens. It just goes up. So this is where we are now. Okay, so now if you want to still do macro, like if you want to still catch, but it's very risky. It's risky to start catching the bottom. It doesn't make sense if you are chasing to catch the absolute bottom. You might get burnt. So that's why I will say, at least for now, once you get a break in market structure, like when you get something like this, a close above that level. For me, say once you have this week here, and there is a rejection, you see that all this down candle, that this green candle now came and closed above all of them. So this is your buy signal. Buy or retest, or on the retest. You can buy on the retest, or you can buy just once we close above it. You buy, and then you put your stop loss below this place. You put your stop loss below this place. Okay. So now, if you still want to go pro, you can still go as low as 5 minutes. That means you can analyze this downtrend in 5 minutes time frame. So find lower high and lower low. So if we want to go lower than this one, we want to catch it's lower, you go to 5 minutes again to see. You want to catch so you want to reduce your stop loss, so you go back to 5 minutes, and you still do the same analysis again as I was doing. Lower low, lower high, lower. This is 5 minutes now. Okay, so now you will see that. So I'm going to remove this one. So you will see that in 5 minutes chart, you will see that this was our lowest low on the 5 minutes chart. Okay, and then this was our last lower high on the 5 minutes. This was our last lower high on the 5 minutes chart. So you put your line here. Oh, sorry. XRP. Everything I've done before. So it's the same principle. So in 5 minutes, if you want to go use 5 minutes, you put your so this is our last lower high here again, somewhere around here. Okay. So when the market breaks that lower high, you can buy or you can wait for a retest. So when it breaks it for the first time, and then it comes down to retest it, and then when it breaks it for the second time, you can buy at that point. Do you understand what I'm saying?
Okay.
Because it has broken the lower high to call for the first time, and then it retested. After retesting, what happened? It broke. It broke even on see, this one was higher a little bit than the previous one.
Yes.
Okay, so once you buy it, and then you put your stop loss at this lower low. So in that way, you have reduced your stop loss. You have reduced your stop loss in that way. So, but the issue is only when you have enough. If you have enough time to be checking all those, it depends on the kind of trader you are. Do you have time to start looking at 5 minutes, or maybe if you have enough time to, fine tune your entry, you can do that. But if you don't have enough time, and maybe you are trading with big money, then you can just wait for a very good confirmation. Okay, so this is just an example of how to do a top-down analysis. It's all about identifying when there is a break in market structure. Okay, so now even if I'm not like me, I don't trade 5 minutes, so I don't trade. You can.
You're not a day trader now.
So I just do 4 hours minimum. My lowest is 4 hours.
Okay.
Yeah. So now, if I'm looking at this market now, I know that this is the lower. I'm trying to predict what is going on in 5 minutes chart, so that I will know whether I should enter. So for me, everything below this line is risky. Everything below this last lower high on the 15 minutes, for me, it is risky. Do you understand? All these things now, because this can be like, it can continue like this, and it can continue and then go down, what's all this now? XRP. So that's why I'm careful, like trying to teach you 15 minutes, because I don't trade 5 minutes. So for me, the most important line is this last lower high, this last sell wall here in 15 minutes. The last swing high that broke that produced the lowest low is the critical point that you look at. Everything here is just gyration. Everything here, because why I say it's gyration is that the market can still reach. It can do as if it wants to go up, and then it will not reach there, and what will happen? It will just go down. Do you understand? So that's why, if you are trading 5 minutes here, it's not wise. If you are trading 5 minutes here, it's not very, very wise. Though some people once they have seen that shift market structure on the 4 hour, they don't mind entering here. So, but it's all about practice now. So if you practice that style and you think that you can do it, nothing stops you from doing it. For the fact that I don't trade 5 minutes doesn't mean that you should not trade for 5 minutes. Once you notice the break a market structure on the 4 hour and the daily, and you're able to catch the entry on 5 minutes, let's say like this is our lower high, lower low. This is a break a market structure, and this is a retest 1, retest 2. If you can buy, that's good for you. Okay, so but anything you are doing, the most important level here is this lower high here. That's where our eyes is, and that's why you will see that the market will always explode once it crosses that level. It will explode upwards, because you are not the only one trading. There are other people that are also trading that, other banks and other people. So the banks, they don't trade 15 minutes, they don't trade 5 minutes, they trade daily, weekly, and monthly. That's what the banks trade. So do you have any question based on this? The main thing is that you need to identify the critical point. The critical point is the last lower high that produced the lowest low. That is the critical point, and that's where you should mark your line. So if you're looking at the chart, the critical point is the last lower high that produced the lowest low. This one here, that's where your eye should be. You see that? Once the market is able to close above that, see this candle here now, once you see a close above this high, you buy. All these dips are for buying. All these red line is for buying. You just buy, and then you are confident that it will not go down. Okay, so go ahead.
Okay, so let's say
yes,
you're looking out for a buy opportunity now.
Mm-hmm.
You're in a bullish chart,
mm-hmm.
and is there any way you can, maybe let's say you see a particular candlestick,
Mm-hmm.
and you feel that the candlestick will make the market like reverse.
Yes. So
Bearish system.
okay. So
like, how can you spot that?
Okay. Good. Okay. So now that brings us to the lecture on candlesticks. Okay. So I'm going to tell you only. There are different candlesticks, but you need only 2 or 3. You need only 3 particular candlesticks. There are so many. I'm talking from my own experience or what I use. So you need 2 or 3. I think 3 majorly. That's what I use. Everything is story. So now let's look at the candlesticks that you can see. What candlesticks can you see at the reversal point? How do you know that the market is going to reverse at this particular point? So that's what we want to see. So now those candlesticks, I would like to see them on the daily. Sorry, let me close this thing. Sorry, just a minute. So let's take a BTC USDT. Let's take Bitcoin. Good. So now this is Bitcoin, and then let's take 4 hour. So now I'm going to show you. Now, from what I'm seeing here now, I know that Bitcoin is going to continue rising now. The market is going to rise in the next 4 minutes or in the next few days ahead. So let me show you the candlesticks in particular. Now,
how many hours time frame is
the best time frame for this I use daily.
Okay.
Now, you look for a well-formed pin bar. A pin bar is this one. See this one? Here, this one. Can you see it?
Yes. Now it's long weeks.
Yes.
With small body.
Goes.
Okay.
When you see that, and remember that this candlestick, sometimes it can be one, it can be two, it can be multiple, but you look for it's very, very classic. It's very, very unique. This particular one here. So, and you will see that the market always explodes whenever that candlestick comes out. Look at this place now here. Okay, after this particular candlestick, you see the market explodes a little bit. The same thing is going to happen here. Okay, after this particular candlestick, the market explodes. Now look at this one. Very, very tiny body. Can you see this particular one? I don't know whether I can see it very well. Let me expand it. Can you see it? This particular one. Now the secret is this. The most effective pin bar is the one that hits people's stop loss. That's the one that is very effective. So it's not just it's not only about the candlestick. You need to see an area of consolidation. That means you need to see like what they call support and resistance. And then you wait for this candlestick to appear and clear all the stop losses and close back within the range. When you see that candlestick, you buy. Let me show you. It's not all of them. This one now loses the pin bar. Okay, but I won't buy with this one. Remember, the rule is that I want to see consolidation. That means I want to see multiple, like an area of resistance. So let me show you what I mean by that. So you can comfortably draw your support and resistance as this place now. Now, can you see that this particular candlestick? Can you see how long the wick is?
Yes.
And it cleared all the stop loss. Assuming those that have stop loss. All this while. This is how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. So for 25 days they have been manipulating these markets now. And then this candlestick now came and cleared the stop loss. And after clearing the stop loss, what happened? It closed back inside the range. Do you see that? Good. Now, that is one thing that you need to look out for. Then, number 2, another thing that you need to look out for is what we call the sign of strength. What's the meaning of sign of strength? It means break a market structure. No. It means break a market structure. Look at. If I analyze only here now, look at this. This was our lower high before. and this is our what? Lower low. This is our lower low. Now, can you see that after this lower low, there was a break in market structure? This one was higher than this one. Can you see that?
Yes.
Good. Now, when you see this sign of strength, so now you now wait to see the candlestick that will form after this break of market structure on the retest part. Okay, so that means that we have a break, we have a higher high here. So that's what we call sign of strength. But can you see like that after this higher high, the market dropped here for the first time, first retest. Like I told you, the market will always retest 2 times or 3 times minimum. So this was the first retest with the body. But can you see that after this second retest, it gave you a very nice pin bar? Can you see that on the second retest? So it came here 1, 2 with a body, then had some consolidation, and then the third one, it wicked, it hit all the stop losses and then came back. When you see this particular signal, when you see a combination of sign of strength on the daily, remember it's on the daily, not 4 hour, on the daily, when you see sign of strength combined with a retest and hitting stop losses like this, you can actually enter with all your money. Like the last trade I took, that last signal I called for you guys on the group, I think that was yesterday or so, day before yesterday. I traded with all my money, and by 6 p.m. I closed all my trades. So there are some things that when you see them, you will know, and that thing is called what? Sign of strength, break in market structure with retest, and on that retest you see this pin bar, this particular pin bar. So you see a consolidation, and then you see this pin bar that hits all the stop losses. This one here, you buy, and when you buy, what will be your take profit when you buy?
Take profit will be above the higher high.
Yeah, exactly. Do you know why? Because this higher high, this one now, yeah, your first take profit will be up here at this higher high, okay, and then the second take profit will be at this red candle here, because you can see that this whole place now, there is no candle has traded in this place. This is only red, so it is called imbalance. It's called imbalance because there is no green candle in that area. You see, there is only red candle here. Do you understand? There is a sharp move here. So, but at least, even if you're entering with all your whole money, at least, even if you take a profit at this place, at this higher high, it's still okay. That's a very good trade. You don't even need to get all these other small ones, all these weeks, wasting time. So anytime you see sign of strength on the daily, that's breaking market structure, and then on the retest you have a consolidation, and then you have a pin bar that wipes all the stop losses, you can enter with all your money, take your profit at the higher high, the bulk of a profit, and then if possible at any imbalance that is close by above that higher high. So this, what I call imbalance, is where the green candle has not traded. So you see this red candle now and the wick, between that wick, see the wick of this candle here. Can you see that? So between this wick now, let me show you what is called imbalance. Between this wick now and this wick here, there's another wick. Let me show you. This green one here, the wick of this candle.
I've not seen it. I've not seen it.
Okay, I'm coming. Let me delete this thing. So can you see it now? Can you see the 2 wicks I'm talking about? This green candle.
The red one.
No, the green one, the candle, there is a wick here, and then there is a wick of the red candle here. This space in between them is called imbalance. So many times the market will always come to fill the imbalance. Okay,
More like a fair value gap.
It's something, yes. They call it the many names, but the main thing is just understand what you're looking at. Even if you don't know the name, know that the market, whenever there is a week here and the market drops very quickly, and then there's another week here, mark out that space. The market will always come back to fill it. This space here, mark it out. Market will come back to fill it. And how you know when the market is ready to come back to fill it is what I'm showing you now. That is the secret I'm showing you now. That's how you know. How you know is that you will have a break of market structure into the range first, like I've shown you here, and then you have a retest, and that retest will come with a consolidation. After consolidation, you see your pin bar that hits all the stop losses on this side. Okay, once all the stop losses have been hit on this side and the market closes back, you enter with all your money. Your take profit 1 is at the highest high, and take profit 2 is at the imbalance, and that's it. Only this thing I've shown you now can be a strategy that will make you a billionaire. Only this thing. You don't need any other thing. Okay? You don't need any other thing, any other trading pattern or whatever. Whether it's you don't need to draw triangle and all those things. All you need is to identify a break in market structure on the daily, like a very clear one. And that's why I like trading daily, because it takes a lot of time. Okay, so it takes a lot of time for the market to form, and you have to be patient with it. Okay, it takes a lot of time. So you can imagine how many days it took to break this structure here, and then to retest, you see, and then to give you, even if you miss this particular one, and maybe by the time you bought somewhere around here, if you bought with all your money, it still makes sense, because you hit your take profit 1 within 3 days time, and you hit your take profit 2 in 3 days time. You are out of the market. Do you get it?
Yes.
Okay. So I'm going to share this screenshot for you so that you use it, you save it as your template. Anytime you are looking at daily charts, identify where, if you see a clean chart that makes sense on the daily, we can bring it, and then we will have a look at it. Just make sure you are able to identify the breaking market structure sign of strength, and then the retest with the week. If you see it, you enter with all your money, set your take profit here and here, and that's it. You don't even need it to break all this part. Just feel the imbalance. That's it. Look at it. So if you assuming you closed here, assuming you close on the imbalance here, all these things here is a zero. You don't need to trade all these things. Okay. So do you have any question at this point? Okay, so I've shown you one candlestick. So I'm going to show you the second candlestick that you need. I believe that one you already know it. It's called the bullish engulfing candle. It's called the bullish engulfing candle. Okay, so but before that, let me just screenshot this and then I'll send to you. Okay, so next lecture, tell me to teach you about accumulation, manipulation, and distribution. So is another topic that you need to know. I will show you what
I didn't get you.
I said. Accumulation, manipulation, and distribution. AMD.
Okay.
AMD.
Okay.
So that's the algorithm of the market. Okay, so our next lecture, tell me to teach you that. But for now, the only thing I want you to learn is to be able to identify a break of market structure on the daily time frame. Okay, be able to identify it on your own. Okay, so be able to identify imbalance, like I showed you here. Identify imbalance first of all. Then identify that the market is trying to fill that imbalance by breaking structure. Okay, and that's called the sign of strength. So after that sign of strength, the market will drop, and then it's going to consolidate for some days, and then it will give you a very nice pin bar that hits all the stop losses. So after this candle here, you can enter with all your money, and you take your profits here, 1, and take your profit at the imbalance. That is all I want you to learn today. If you can master this one thing, and then try to see whether you see any chart, whether it's 4 hour or 1 hour or daily, that demonstrates this whole, that meets all these elements, and you can send it across to me. You can label it and send me. I will check. I will mark it. So this is a trading pattern on its own. When you see an imbalance and then you see the market breaking structure to try to fill it, it didn't fill it the first time, and then it retests and gives you a rejection. You buy, take profit here, and take profit at the imbalance. This is a trading model alone. What I've shown you now is a way of trading, is a style of trading alone on its own. Okay.